All right. Good morning, guys. Good morning. Good morning. Where are we? Apologies for the delay, guys. Just catching up on some stuff, but we're here. Good morning, guys. Welcome back. Let me turn this down a little bit. Good morning, guys. Good morning. Good morning. Happy FOMC day, guys. Big FOMC day today. You can see I'm on a combine today. Before anyone tries to expose me here, yes, I am on a combine because it's a big FOMC day today. So I don't think it makes too much sense to try and trade funded accounts today, especially with the price action. So we'll still see what we get, analyze the market, see what we have coming into FOMC, which is at 7 o'clock London time today, guys. So it's very, very, very big news. Very, very, very big news. I did take a little bit of a losing trade yesterday. If you guys are following me over on X, you would have saw. Yeah, that's true. Exposing yourself is still getting exposed. Yeah, that's pretty true. If you guys are over on X, I did post a little loss that I took yesterday. It was a little bit of an error on my side yesterday, to be honest. This to me shouldn't have been a losing day. Even though it was only a minus $155 day. It shouldn't have been a losing day. I kind of broke my plan yesterday, just trying to trade too low time frame to be able to just show live getting in and out of trades. But to be honest, there was no reason for me to close my trade. Obviously, we're still up nice and overall. But yeah, we did take a $155 loss. So if you guys are over on X, be sure to drop myself a follow at the Aaron Trades. If you want to share some charts today, guys, because we do have time here on FOMC day, you can hashtag London Open at TopstepTV at myself, and then we'll be able to see some charts as well. Let's have a look here. So we'll see what gold gives for the day, guys. Obviously, you know, it is the big FOMC day today, so we do want to be cautious of trading before that. Obviously, if you guys are trading combines anyway, then, you know, that's just like me continuing to trade funded accounts here today. So I would advise to be very cautious doing that. So it's at 8 o'clock my time, 7 o'clock London time. And then that's pretty much the main news of the week. Tomorrow we do have jobless claims. It's not really going to do that much to the market. Silver today, I haven't seen silver today, but I did see silver yesterday. Silver was an absolute crazy run on fast markets yesterday. You guys who were here on the stream yesterday, we did talk about nice silver longs to come up into this double top. Now, I didn't know silver would go like it is. I kind of wish I actually owned some silver, because this is a pretty phenomenal push. Silver's up like 6% in the past day, which is absolutely insane. I didn't get my laptop fixed, but I am going to be taking it in over the weekend. But I'm on the same screen I normally stream on today. It's much better. It's a little bit gray, but it's much better than it was yesterday, which is, yeah, I don't know. This computer has a mind of its own. Yeah, I don't know. Is there any fundamental reason why silver is so bullish? It's absolutely insane. Like I say, I don't own any silver, but as an investment, you know, what's silver up this year? We know gold's up big this year. What's silver up this year? Silver's going to be up way more than gold, which is crazy. From December to now, yeah, almost 100% on silver in a year. That's absolutely insane. In terms of trading silver, though, look at this. Again, you know, although we didn't take this because we don't trade silver, if you guys remember from yesterday's stream, this is pretty much the exact same way we trade gold. You break below, you break right back above. What's that? That's our beautiful daily fake out play. There's your long trade. Now, obviously, you didn't know silver was going to go this high, so I'm not going to even attempt to pretend that we called this move on silver, but the longs on silver made sense. Whereas most people, you know, they see this big push up and they get obsessed with shorts in this region. They try and call tops, they try and short silver, and silver continues ripping up. Well, that's the smart trade. And that was an absolutely beautiful position. Made 5K on silver today, nice. Oh no, just to blow up my account later on in the day with silver. Oh damn, I only read the first part. You could have just said the first part. Oh man, I made 5K on silver today just to blow up my account later on in the day with silver. Damn. I thought it was gonna be that was just about to be a good clip right there. trader makes 5k trading silver and he just said he lost it all. Yeah, it happens, man. It happens. Just figure out what do you do right, what do you do wrong, what can you do to make sure you don't do that again. Yeah, we'll look at NQ. Caught long yesterday. NQ, nice. This was my long on fast markets yesterday on gold, which it wasn't the cleanest of trades, but there was no reason for me to actually exit this trade when I looked back at it. The only reason I closed this trade is because I was being so focused on the lower time frame, like the 5 minute, and that's why I would say to you guys, try and get off that 5 minute as soon as you can. But this is the long I took yesterday in fast markets, based off price, breaking below, reclosing back above. You came down for this huge liquidity grab and held the support. So buying this 330 candle, I should have been buying this all day long until it breaks below. It ended up being a really, really, really nice push. It was about 150 tick, came all the way up into that 42.50 level, which was our perfect resistance. So I think I closed it on the 5 minute. Again, that's why sometimes the 5 minute gold can be so tough. So I was long from, I think I was long from around here or something. And I think I maybe closed it like here, I believe. And then it ended up just absolutely booming. I looked back and I go, well, there was nice 15 re-entry as well. Here, there's nice 15 liquidity. I could have got right back in. But sometimes that's hard to take these trades live because you need to... Best positions with gold is when you kind of execute these and walk away. And the lower time frame yesterday on gold was very, 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 very tough. Very, very, very tough. You had this huge sort of whipsaw price action that, you usually see something like this on NQ. It's very rarely you'll see gold, rip down and then rip up and then down and then up and then back up again. Usually, gold could maybe rip up and then down and then sell off, but it's very rarely you'll see gold have this big of whipsaw price action. But again, is it surprising? Not at all. We have FOMC today. That's why, although I think I was wrong yesterday on like maybe 2 trades, so I only lost $150. Why did I only lose $150? Because I decided to trade pre-FOMC, therefore I accept that risk, therefore I reduce my size. So when you trade before major news, you have to accept that risk and accept that if it doesn't work, well, you decided to take that trade before news. So if I take a trade before news, it's very likely going to range. It could get pretty choppy. Therefore, does it make sense for me to go all in big size? Of course not. So then I'll reduce my risk just to still get a feel for the markets. I think NQ's going to rip. We can have a look. Let's have a look at gold for the day, guys. Let's see how yesterday closed here on gold. Nice thing about gold is you held this 4,200 level pretty perfectly and came down and tagged previous day lows. So we had a nice sell bias here on the 8th, which was Monday. We had a nice sell bias on Monday to come down and tag previous day lows. That got hit pretty perfectly. And then yesterday, came down, tagged lows, held 4,200, and came straight back up to previous daily highs. So you can kind of see gold. We have gold trapped in between a very decent 500 tick range. 4,200 to 4,250 is a very, very, very big area for gold. We've kind of been stuck in this since the 2nd, which was last Tuesday. We tried to break above 4250, we failed. We tried to break below 4200, we also failed. So major resistance, major support. Do you think being on fast markets somehow makes you want to perform and take all managed trades wrong? It does, but that's just my own thinking. Like, it actually shouldn't have, because I could have still taken the trade on the 30 minute and held it. But yeah, the whole reason I closed my trade yesterday was because I was sat there watching it. Whereas if I'd taken this trade, when I take these 30 minute trades, I don't sit here and watch it. I'll take these 30 minute trades and walk away, and I'll set my alerts at levels. So yeah, to a degree, yes. If I wasn't, not that if I wasn't on fast markets, but if I wasn't watching this live, I would have held it. So to a degree, yes, but to a degree, no, because sometimes, streaming does also help you stay more disciplined at times. Sometimes when you got people watching you, it makes you want to fight that urge to want to do something stupid that we all get. So, yes and no. Yes and no. But yeah, if I wasn't watching this live yesterday, I would have executed this breakout and just held it and walked away. The targets were perfect. The 4250 was perfect. Again, with that being said, was it the nicest of price action? Not really, because the hourly didn't really confirm that much anyway. So it was a not the easiest of trades, not the worst of trades. So I was happy to lose 150 on the day, I'll be honest. Minus 150 was good for me. Yeah, targets were very nice. Yeah, good morning everyone, good morning man. So Goldie, daily time frame, 4200 support, 4250 big resistance. Now yesterday's candle failed to close above the highs, also failed to close below the lows, but we did wick both sides. So we've tagged the highs, we've also tagged the lows. So daily bias right now is a little bit tough here on gold. The only thing I do like on gold is the fact that we are still very bullish. And if we look at this weekly time frame on gold, what makes the most sense right now? FOMC, yeah, loads of FOMC questions. Yeah, we got FOMC at 7 o'clock London time, 7 p.m. London time. That's the reason I'm trading Combine here today. Big news. So that's why I'm trading a Combine here, because if I trade my funded accounts before major news and I take a loss, I'm going to kick myself. So therefore, it's just not mentally worth it. 4-hour time frame here on gold. What makes the most sense? Actually, sorry, we were doing the weekly. What makes the most sense here in the weekly time frame? Because that's going to be the biggest picture here. To be honest, I look at this weekly. It looks like you may want to potentially come for a bit of a retracement back down into maybe even 4150 before you do see the overall longs. I don't really have any levels where I'm like, oh yeah, you know, leading up to FOMC, here's some clear highs or here's some clear lows. I think I'm going to have to stay very reactive leading up to FOMC. The one thing that I do like here on gold on the intraday time frame is this is our massive range. Here's our big resistance. Here's our big support. Well, look what we did to the highs of the range. We came up, we tagged the highs, we sold off. What have we not yet done to the lows of the range? We haven't yet grabbed the lows. So to me, there's the possibility, whether it happens on FOMC or whether it happens before FOMC, gold to come back down to retest these lows from the 2nd of December and probably liquidate some further lows makes the most sense right now. As long as these lows haven't been grabbed on the spot chart, I actually think gold may have a bit of a sell-off today. Again, what I think and what's going to happen leading up to FOMC doesn't really matter too much, but if I had to give it a say, I would say downside makes the most sense. I wouldn't really be looking to buy gold into 4250. I think selling gold around that FOMC looks nicer. Again though, will completely depend on how the news comes out. If gold pushes up, will I get frustrated and emotional? Not at all. So intraday here on gold for London, not taking on spot. Nice one, Tom. Cool, that's good. Intraday on gold, what we've seen so far today for Asia, obviously we've had this big ranges where I also said on fast markets yesterday that if gold closes back into this range, you don't want to trade. And the whole reason I said that is because this is where it can get very, very choppy. And this is where you can get pretty wiped out. So right now on gold, technicals have to be kept super simple. We have intraday support here. We have intraday resistance up here. Look at this. You tried to break above it today in Asia, broke right back below. So I'd like to see gold come for a bit of a sell-off here, to be honest. You're very likely range before FOMC, of course, but an initial sell-off on gold, sorry, not an initial sell-off, a sell-off on gold today makes sense. So we have two very nice liquidity levels. We have the pre-New York lows from yesterday, around that 42.18-ish, and then we have the lows all the way down here at 41.93. So if I had to give a say based on everything we've looked at so far for FOMC, I think gold might have a bit of a sell-off. I like potential downside on gold. Yes, 100%, David. That's a very, very good point, and it actually does that a lot. There's a very good observation is, yeah, if you have key liquidity levels, like say you got double tops and double bottoms, price can respect them all the way until the news. So if you try and trade into liquidity before news, you can get stopped out majority of the time. I would sometimes find myself stuck in some bad trades trying to trade into liquidity before news, and it wouldn't get tapped all the way until news. So no, that is a very good observation because it actually happens a lot. Like if we have a nice double top, kind of like yesterday, you know, trading into this double top before major news, you can kind of respect the high that many times that you start thinking to yourself, oh, surely we're going to grab it soon. But it takes all the way until news, and then you kind of have the whole entire move. You've seen that happen a lot, even with I've seen it happen a lot with trend lines as well. You know, NFP, FOMC. You can see gold, you know, kind of respecting trend lines like this And you think at this point, oh, we're gonna rip this trend line, but you can literally do this all the way until major news, and then news comes out, and then you finally have the rip. So trying to trade into liquidity before news, yeah, you can get stuck in some pretty tricky positions. So if I trade into liquidity, yeah, it's only either at the news or I'll just trade it the next day. Can you ask her to send the back of it as well so I can try to upload it? Nice, thank you. Yeah, right into, yeah, absolute, man. 5:30 for me here, and I was reading watch FOMC, but I'll be dreaming it. Yeah, yeah. I used to, when I was back in Australia, I never used to get to watch FOMC. Just take a trade and go to sleep, man. Don't worry about it. Let's have a look at NQ here, guys. See what we got for NQ for the day. So NQ, let's see. We still have that nice double top target on NQ. So gold potentially lower, NQ potentially higher. Remember, higher time frame on NQ is still obviously extremely bullish. Very, very, very bullish on NQ. You had that huge breakout previous week. Last week continued breaking above. You had this huge support of 25,250. You broke above 25,500. So NQ to continue pushing higher makes sense as well. Now you can see how choppy we're getting on here. Look at this daily time frame. You've kind of been ranging since the 3rd of December. December price action has been very tough to start the month, guys. So hopefully you guys are surviving, if not taking small losses. But this price action starting to December hasn't been the best. I haven't lost money, fortunately, but if you have, it's totally fine. The price action hasn't been the cleanest. But when you understand the daily time frame and you can see prices this choppy, when you drop down to the lower time frame, you just stay a lot more cautious. We got London Open in about 2 minutes here as well, guys. But yeah, I'd be very cautious trading before FOMC, especially in New York session today, guys. But again, always remind yourself, guys, why did you get into trading? Well, majority of people got into trading for the freedom aspect. So on a day like today where you have FOMC, although you may not be where you want to be in trading just yet, when you get to a point of full-time trading, you see FOMC, you go, cool, you know what? This is going to be a day off for me. Or if not, it's going to be a long weekend. Fantastic. That's the beautiful thing about trading is we don't have to be trading all the time, every single day in positions to be still trading, Not trading is also trading, guys. So NQ, very nice upside targets. I think NQ back to 26,000 looks very, very, very nice. You have two beautiful double tops here. Very nice liquidity targets all the way from back on the 4th of November, which will be a nice target. Anyone who's trying to short NQ, I think will get squeezed out. Look at this move yesterday. Look at this here on NQ. Look at this on NQ. Came down, hit these lows, broke back above. You have a nice, look at this nice morning star play here. 3-bar reversal, you guys like to call it. Look at that, beautiful. Pretty much the same as yesterday. Here, tag the highs, didn't quite work out yesterday. Working out nicely here. So I would say NQ longs look nice. Now, what could you see for London on NQ? Well, ideally, you'd already be buying. Because you don't want to be buying here because you're coming back into resistance. So unless you break 25,750 in London, which I would be surprised if you do, you may find some resistance and sell off here. Would have been lovely to buy this up pre-London. Sorry, this is Asia on the 4-hour time frame, excuse me. So this was, this was yesterday. This was Asia. So, but yeah, buying here pre-London 6 a.m. would have been a lovely push. Oh, nice. About to close 300 ticks on NQ. Nice, Ian. Where did you get it from, man? You get it from the morning star play? Yeah, beautiful, man. Beautiful, beautiful, beautiful. So you guys on YouTube, we have Ian on Zoom, long from down here on the hourly. Yeah, huge trade, man. Before FOMC, that's an absolutely huge trade. How many points is that? That's absolutely huge. 70-point move before FOMC is incredible, man. Holding a break even. I honestly think with FOMC, you could get some pretty big whips or price action. I think that's a great trade before news. Now, obviously, I don't want to tell you to do anything, but that is a great trade. That is a very, very, very nice trade. Closing 80% short. Yeah, nice, nice. Yeah, leave some on. Why not, man? If it's just a little runner, why not? See if it can run. The only thing is with FOMC, if your entry's here, it wouldn't be that surprising to, we know NQ can have these crazy like whipsaw price actions before doing something like this. So I would say, again, I don't know, but I would say there's probably a high chance we could maybe come back down to this area one more time before news. I would be very surprised to see if this is the lows on NQ to have this big push up. Maybe. I would be surprised. It's kind of what NQ loves to do in the New York session. You kind of have some nice support, you come all the way back down for the lows, and then you have the push. So even here, you get a nice push up, you come all the way down, and then you have the push. I would say there's a high chance your runners get stopped, but then again, if you just want to hold it for the sake of having a run just to see how it goes, yeah, why not? Why not? If you've secured 80%, that's fantastic. We got London Open here, guys. Let's have a look at Goldie. So gold closed bearish with no bottom wick right at support. Now an hourly closure on gold bearish with no bottom wick is typically a potential reversal sign. If you see an hourly candle close bearish with no bottom wick or bullish with no top wick, the next candle can typically completely reverse. And not only did you close bearish with no bottom wick, you closed bearish with no bottom wick right at support. So it's not a decent, not a bad little bounce level here on gold. Look at the euro. Let's have a look. The euro again. The euro is probably going to get pretty. I haven't looked at the euro in a while. Let's see. Where's the euro been up to? Euro. Let's see. So euro kind of stuck between 1.7 to 1.6250, which is nice support. How did you close? Higher time frame. Pretty bullish. I think you probably see euro continue pushing higher. I think last week's high on the euro would be a pretty decent upside target. And you also have above there that 1.7 level. And then you do also have some highs here, again, right at that 1.7 level. So I think euro longs look nice. When you guys want me to look at some instruments, always feel free to send over what you're looking at so we can see if we're looking at the same. So then we can see if it lines up, or if we're looking at different. There's no, there's no wrong or right answer as to how we should be looking at the markets. But it's nice to just see what you guys are seeing and see what I'm seeing and see if it lines up, or if we see something different. Great. Euro here though, look at this. Pretty much what we said. Now this is a pretty perfect trend line coming down here on the euro. Pretty perfect trend line meaning there is a high chance that you will come up for some big liquidity grabs. You have to think, if anyone's trying to short the euro right now, to me, you'll very likely get trapped. Same as gold yesterday, which I was saying on fast markets. People trying to short too late, they'll very likely get trapped. So I'd be looking for the euro. Again, remember, it's FOMC. It's a US dollar related market, so it could take all the way until FOMC, but there would be a very high chance. Again, what would be interesting to see when we jump on tomorrow, how the analysis played out. But I would say euro longs look pretty good. That buy off 1.16250, which we have had for a long time, is holding very, very, very well. I think gold, euro into 1.17 looks nice. Again, is it a market I would trade for at FOMC? Personally, I wouldn't. I'd be very cautious. See if we can find a time where gold closed bearish, no bottom wick. You kind of see here. So you closed bearish. Here closed bearish. There wasn't much of a bottom wick. Completely reversed. You kind of got a little one there. Where's the time where we closed bearish on an hourly, no bottom wick? You don't see it very, very often. You kind of see here, closed bearish, no bottom wick, reversed. Is there any other? It doesn't happen very, very often. Where is it? Any other ones? I'm probably missing some. Not very often, but when you do see it, you kind of closed here. You still kind of sold off this time, so it didn't really work that time. You still sold off. But the majority of these candles, bearish with no bottom wick, bullish no top wick, the next candle completely reverse. Hey Darren, welcome in, man. No, don't even trade on FOMC day. Neither. Trading for FOMC is borderline just gambling, to be honest. Unless you want to take a position for fun just to see how it goes, maybe you've got some nice liquidity levels, you can, but no, I don't trade before FOMC, man. Nah. There's no point. You know, because you trade before FOMC, sometimes you can have a movement for FOMC, but majority of the time you'll end up doing this. And this is the price action where you get stuck in all day long and you mentally drain yourself. And then you look back and you go, why on earth was I trying to trade there? So this is the price action where not only can you take a lot of annoying losses, It's also the type of price action where you can just mentally drain yourself, getting stuck in sideways price action for hours and hours and hours, all the way leading up till news. So if you want to trade FOMC, I would just trade the following day. FOMC is not until 7 o'clock London time, so that day's pretty much a write-off, so trade the next day. And actually, you guys who trade the Asian session, the day after FOMC, you can actually get really good trades. So if you guys who do trade Asia tomorrow on Friday will be, Thursday will be very, very nice. What do you think of shorting oil until news? Let's have a look. What's oil been up to? Let's see. Yeah, exactly. Something like that. Shorting oil, despite the EIA crude trade. I mean, you've had a pretty. Look at this. You had a very decent sell-off on Monday. You had a huge sell-off on Monday. Continued selling yesterday. So yeah, I would say shorts on crude make the most sense. I've lost all my levels here. You've broken back below 60, which is very nice. Break back below 60 is a huge level. Let's put on 60 there. Let's make this 50%. Broke back below 60. Below we do have, where we got? We got 58, 57, 57.5 looks like a pretty decent level. 57.5. So you got nice support of 57.5. Yeah, I would say shorts on oil make the most sense. Although you do have some support here, you may get a bit of an intraday pullback. And then I'd be looking to actually continue selling this. Based off how the week's gone so far, it's a pretty decent sell-off. And you bounced perfectly right above that 60 level. Not only that is, look how many highs you also tagged. I think you would have got a lot of people. You basically had like a triple top here. You had a triple top here on oil. Again, oil, same thing as gold. Loves to do the exact same thing. People try and short here. People try and short here. What do? You come up, you tag the highest point, and then you have that huge sell-off, which was a very, 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 very nice reversal there. Like, that was a great reversal. So I think selling oil is the most logical trade here. Kind of see here, like, what do you do before the big push up? You come down, tag the lowest point, then you have the push. You come up, tag the highest point, then you have the push. So yeah, you may get some intraday pullbacks on crude though. This already is a pretty decent sell-off for the week. You know, down 3.6%. It's a very, very decent push. You may get a little bit of a pullback, but yeah, ideally you'd want to continue selling that. You are also, one thing to note is you are also kind of below these lows here. So I would imagine people who are shorting oil would be looking to maybe take some positions off here. So you came up, tagged the highs, sold off. You're now coming down, tagged the lows. So could this be a potential pullback level before going short? Yeah, I think so. I think this area is an interesting area to watch. I don't think I'd want to get short this low. You got out on NQ. Nice. 350 ticks on NQ pre-FOMC, man. That's an absolutely phenomenal trade. You're coming up and tagging the highs now here as well. An absolutely beautiful trade, man. Fantastic trade. What made that trade so nice? Clear bullish bias, upside targets, lovely liquidity grab yesterday, morning star play. Great trade, man. Absolutely great trade. Great trade. Yep. Bought, set stop loss, went about my day. Yeah, absolutely amazing, man. How long did you hold that for? Like a good couple of hours, right? From 2 a.m. all the way until 8 a.m. 6 hours. Great trade. Absolutely great trade. Probably nicest trade so far this morning. Sometimes they're the best positions, man. Having the discipline to be able to actually execute and walk away for so long is amazing. And that's why I remember, guys, you know, some of you guys may not have the ability in terms of time right now to be on the charts all the time, all day. But to be honest, I don't think that's good anyway. You know, you guys have busy family life, busy work lives. You know, like Ian just did, took this trade at 2 a.m. London time and has just closed it at 8 a.m. So it's like you've just held this trade for like 6 hours. Like there's no need to watch this in between. You execute, you go about your business and you walk away. You set your alerts. Set your alerts to the stops, set your alerts to the management points, and just let the trade play out. Absolutely amazing trade, man. Great trade. Average hold for winners is around 5 to 6 hours. Trading hourly doesn't give me much choice. No, that's to be honest, man, that's good. I think if you were watching this on lower time frame, you probably would have got shaken out of this position multiple times if you were watching this. Look at this. It sells off here. If you were watching this in real time, you're long from down here, you go, oh, maybe I should close the trade. Then it rips up, then sells off, you go, oh, I'm going to close the trade. And it ends up just doing exactly what you want. You look at the high time frame and you go, cool, there was no reason to hold that trade. It was just lovely intraday liquidity grabs. And that's why sometimes trading this hourly time frame and 30-minute time frame can be the best time frame to trade. So an average hold time of 5 to 6 hours is actually very impressive, man. It's very impressive. Alerts for this trade, I'll be setting alerts at all these resistance levels here, because these are potential reversal levels. So if I was long from down here, this would be my break-even point, and this would be my target. So I'd have an alert when my break-even point goes off, and then I would have my alert here to start to maybe even exit the trade. Or even here, to be honest, for an intraday trade up into here, I'd probably be looking to take some off. I always set my alerts on gold or any market, even for the stocks I'm trading. My alerts always go at levels where it can potentially go against me. So they're like neutral points, although I'd love to see it, do this. If it sells off from here, that wouldn't be surprising. Therefore, there'd be no reason to leave that trade open and just watch it stop you out. Which did you do, Ian? Did you set alerts along the way, or were you just kind of just monitoring hourly candle closures? I'm not on fast markets today. We'll be back on fast markets next week. Being on fast markets before FOMC is pretty scary. I wouldn't want to have to trade before FOMC. And I'll be back on fast markets next week. Check out copper. Yep, we can have a look at copper. Absolutely. Have alerts to the resistance lines on my chart. But to be honest, it's just for moving to break even, then I'm back to not watching. Yeah, it's amazing, man. Absolutely amazing. Love that. It's incredible discipline, man. To be able to actually execute and not watch it every 15 minutes is really impressive. That's the level that we all want to get to. It's amazing work, man. Yeah, we got to look at copper. I haven't looked at copper in a while, actually. We used to like taking copper trades. Remember, guys, we're just kind of we're just hanging out, doing some analysis before FOMC. So, anything you guys do want to see, feel free to send it over. It doesn't have to be. Sammy's jumping all over the tables. Me? It doesn't have to be. It doesn't have to be typical markets that we trade. Anything you guys want me to look over, we can use this to do some analysis leading up to FOMC, and then when we jump on tomorrow, we'll see how the levels play out. So copper, let's get rid of everything on copper. Let's do some fresh analysis. So copper's been an interesting one recently. We used to like taking trading copper, to be honest. Best trades are fire and forget, yes. Over manage and revenge trade, but if I get stopped out, so be it. Going about my day anyway. Yeah, I love that, man. It's honestly the best trades as well. You save yourself a lot of lower time frame noise. And the good thing about doing that is taking your trades and walking away is you're still following the rules of Topstep of being in and out within the same day, which is amazing. You have to remember, guys, just because on Topstep we have to close our positions by like 3 o'clock Central Time, you can still realistically hold your position for a long time. Like what, 20 plus hours or something? So if you guys don't have the time to sit here and day trade, that doesn't mean you can't trade. You just need to focus on the higher time frame. You could take a position in the Asian session, hold it all the way through to New York. And remember, just because we're day trading doesn't mean we have to be in and out on the 5 minute. You could take a couple of hourly trades a few times a week and be making great returns. So copper, let's have a look. How do we close? We had this huge sell-off end of July on copper. Absolutely huge sell-off. And we just kind of crept all the way back up. Now, with where copper's coming into, you are coming back into some major resistance levels. And it kind of does look like a very big, I think we might squeeze it higher, but this does look like a pretty big head and shoulders play. We haven't really retraced much of this move up here. You've kind of just been slowly grinding high. I think a lot of people will be getting trapped in potentially trying to swing short this, and you've just gone higher and higher. So we are still bullish on copper. This has been a pretty decent run up here. We closed very bullish last week. in terms of key levels, what we've broken above. So we're trading way back above $5, which is a big level. It doesn't have to be, let's make it exact. It does have to be exact. Trading back above $5. Above here, what do we have around this resistance? We've got 550 is a big level. I like that level. 550 is the big upside resistance here. Let's put it to 550. Where are we here? So massive resistance at 550. $5 to 550 is a huge area. Could we potentially see some selling from this 550 level? Well, it's kind of looking like we're already seeing it a bit. You had this nice evening star play from here. Let me just see gold. Tough thing is, you're kind of selling right back into support as well. So it's a kind of a big or make or break level right now. Is this support going to hold? Or we're going to see a leg higher, or is this resistance going to hold? We may see another sell-off. Well, I think even if this resistance was going to hold, it'd be more likely that you would probably retest this one more time before potentially selling off. Therefore, you might do something like that. So potential copper longs. Copper longs to come up and retest that resistance. Look what we just did here as well. Same plan as gold. Came up, tagged the highs, sold off. You kind of do have some intraday resistance right here as well. I personally think there's another nicer opportunities out there right now. So what we do have is haven't quite yet hit the lows, hit the highs, sold off. So maybe you see something like this on copper. Come down and retest these lows before then maybe coming back up to retest the highs. It's a pretty higher time frame outlook, but before FOMC, you don't really want to overthink too much. Other major days to avoid is probably NFP is probably the biggest one. NFP is probably a big one. Yeah, that sell-off on copper was insane. It was more crazy to see the fact that we've almost retraced the whole entire move. It's probably one of the biggest sell-offs I've ever seen in a market live. It was absolutely huge. Down like 25% in 2 days, which is insane. To be down 25%, some people put their nuts on the line and bought this right back up and made 21%, which is insane. The only other probably craziest drop we had was when we saw crude go below zero. That's probably the other craziest drop I've ever seen. It remembers who was trading when crude went to zero? It actually went to minus. I don't know if we'll be able to see it. If we'll be able to get back far. If who remembers that? People were trading then? Look at this, now we're right back up. I'm pretty sure it went yeah, so it went as low as minus 2, which was absolutely insane. I remember thinking this seems like a pretty good place to swing trade some crude. If you could even got any orders, it's look at that, absolutely ridiculous. That's like a once in a lifetime opportunity. It's just it doesn't even make sense. Yeah, it's absolutely insane. That was a crazy time. Remember, guys, you guys on Zoom share charts. You guys on YouTube also feel free to. Oh yeah, for sure. I've seen it. Yeah, a few people made a lot of money on that. Yeah. You guys on YouTube, if you hashtag London Open at TopstepTV at myself, we can share some charts here as well. Let me check them on to see. Nice trading gold, London Open, nice. People sharing charts, cool. Yes. Some guys in the UK made absolute bank of it. Yep. Crazy, absolutely crazy. Absolutely crazy, but it was literally like a once in a lifetime opportunity. It was absolutely insane. If you were to trade the higher time frame, would you really just have to watch the closes and keep setting your break even how it goes? It's just exactly the same thing as just intraday trade, man. Your break even just goes on potential reversal levels. When it starts hitting the reverse levels, like if you're buying this on gold, starts hitting these regions, now you're managing your risk. It's honestly the exact same thing. It's that same thing as the way we day trade. You know, we move our stops to break even when it starts hitting support or liquidity levels. Same thing, you know, you watch an hourly and 4 hourly candle closes. Same as this NQ trade, you're just managing your risk as it comes to levels where it could potentially go against you. Thing is with these hourly time frame trades is you have to have the discipline to actually walk away and let them play out. If you want to trade the 30-minute or you want to trade the hourly, if you sit there and watch the 30-minute or hourly candle go up and down and up and down, you know, you'll end up talking yourself out of the position because that's what the markets want to do before it ends up doing what you want. So you have to have the discipline to execute, set your stops and set your alerts and walk away. They made 500 to 700 million. That's absolutely insane. Is there an art? Can you send me that, please? That's absolutely insane. There's your there's your one trade for the lifetime. Take one of them once in your life, you're done. So if we can get an opportunity like that again, that'd be fantastic. They also must have had a lot of money to be able to buy it in the first place. Where is it? Oh, they were accused of manipulating the markets. Wow. Evidence of WhatsApp text between UK-based men who reportedly made 700 million on the collapse of oil. But they didn't. Why would they be? They didn't collapse oil. They just. Please don't tell. Oh no. Yeah, that's crazy. Made 700 million on the collapse of oil price in 2020. That is crazy. Their capital, yeah. So yeah, it already had a. Yeah, can I get access to that WhatsApp group? How do I get access? Is there a link, guys? That's crazy. Traders WhatsApp group. Was this a Legends access? That's amazing. Yeah, I think I need to get access to that. We push it for this one moment. Wow, that's crazy. Oh, they were selling oil. So they weren't buying oil, they were shorting oil. Wait. Wow, that's crazy. That's crazy. Yeah, I need access to that group. That's crazy. That's pretty cool. Ideas on silver is very, very, very bullish. You're kind of it's kind of like when we were trading gold at all-time highs. The only way to trade all-time highs is to let price pull back and continue buying. Silver's at a very, very difficult level. You know, buying it yesterday was great. We spoke about the longs yesterday from this liquidity level. You guys who were here yesterday, we spoke about this long up. We didn't know it would come this high. But in terms of what would we want to see up here? Well, at what point does it become overextended? And at what point does it create some range before potentially pulling back? You know, it's kind of hard to want to trade silver up here because, you know, where's your stop and where's your target? You have nothing to the left. So the best way to trade all-time highs, for me personally, the same as the way I was trading gold when we were at all-time highs, is letting all-time highs print like this. Let this all-time high print. Look for intraday pullbacks, and then when you get down here, great, now you got price action to the left, you can start dropping down to lower time frames and looking for trades. But when you're kind of actually at these all-time high levels, printing new all-time highs, you don't want to sell up here, you also don't want to buy up here. The reason you don't want to sell is because you don't want to be short in all-time highs trying to, you know, call the tops. You also don't want to be buying because there's no risk to reward. So when you're this high, you kind of have to accept it, let it pull back and then trade. Same as here, look at this. You print at all-time high, you pull back, you find some support, then you buy here because you have price action to the left. So exactly the same thing. You'd want to see peak some highs, come down and find some support wherever that may be when you look for signs like this, and then you look to continue buying. So this right here, what we had in Asia today, is exactly how you'd want to continue buying. The only thing is with this on silver is most people see this and think, oh, great, this is going to be the big short. This is going to be the jackpot short, and then they miss out on these continuation longs. So for silver, I'd be looking for any signs of support. I wouldn't buy it this high, then I'd look to continue buying into this all-time high. Keep it super simple when you're printing all-time high. Try not to think too much. Yeah, we could if we all start buying gold on our sim accounts, we could start manipulating it easy. Longs on gold. It is a nice 50-minute Morningstar play, but look at where you're trading into. Look at the price action to the left here on gold right now. It's not a bad reason to look for longs from down here in normal markets, but look where you're trading into. Do you want to be trading into this resistance right here? Although it is a bit of a 3-bar reversal, same thing as a Morningstar. The key is you don't want to be taking every single morning and evening star play that you see. That's the key. If you try and take every single morning and evening star, you know, it won't work majority of the time. The reason I wouldn't take this morning star play to go long is look at the previous hourly. Previous hourly closed bearish and broke below support. So right now here on gold, here's your hourly support, here's your hourly resistance. I know it's kind of hard to want to fight that urge to want to be in a trade, but look at the price action. To me, if I want to be taking a trade, I want to see nice clear levels to the left, whereas right now I can see resistance right here, and I can also see, just to clean it up a little bit, I can see support right here. So this for me would be a level where I wouldn't want to get chopped up in. So although it can be maybe a nice 15-minute Morningstar, a 15-minute Morningstar isn't enough to want to take a trade. You need a 15-minute Morningstar with clear liquidity levels above, or clear ranges to play. Just because it could be one of them trades right now. You get in this trade, it just goes absolutely sideways. And also remember, not trading and protecting your capital is also trading. You'd rather not do anything in these ranges and save yourself a loss. You know, wait for the clearer days rather than taking a trade in here today, losing, and then when the clean day comes up tomorrow or Friday or next week, you'll kick yourself because you'll always be trying to chase your tail to get back to break even. Whereas the days like today, you know, rather than trying to chase something for the sake of just being in a trade all the time, you kind of have to accept it and wait. So for me personally, I'm not saying, you know, don't take the trade, but for me personally, I wouldn't take the trade on gold. Which one, sorry man, which one? Uh, 3 o'clock. On the hourly, let's see. This one from yesterday. This is a much nicer evening star play, definitely. But again, with this evening star play, there's no downside targets. You have no liquidity levels. You're selling right into support again. The nicest were the longs yesterday, because the daily time frame was a bullish bias and you had clear liquidity targets. So this morning star, which was a lower time frame one, was nicer. This one I wouldn't short because again, you're selling right into resistance. You're selling right into a very, very, very messy range. So I can see this one here from yesterday, but yeah, I wouldn't have shorted that. The reason I wouldn't have shorted that is because like what my target's here, right? Support. Uh, 15. Which one? And which one? This one. Nothing in this range for FOMC is nice, to be honest. Gold is very, very, very choppy here, guys. And like I say, it'll be very choppy all the way until FOMC. So like I said to you guys, it's one of them days where you get to enjoy the freedom side of trading. Don't feel like you need to be in a position all the time. Because I can almost guarantee you guys, you take a trade today, you lose money when the markets make more sense tomorrow. Once we've got news out of the way, you know, you'll kick yourself not being able to sit on your hands. That's what I would find would happen a lot. I would try and trade before major news events. I would take losses. The next day, there'd be a great opportunity, and I'd be just about getting back to break even because I couldn't bear to not be in a position all the time. Whereas not trading is also trading, guys. I've taken 2 trades so far this week. And that's it. That's it. Yeah, that's not a Morningstar play. So that's more of just a fake out play. You didn't really grab the lows. It's more of just a fake out buy here. But again, it's just an hourly range. Big range. But isn't gold bias bullish? What do you mean, man? Isn't what does that mean? Does it mean we should buy gold? Anything happen? To me, the gold looks like you want to have some intraday liquidity grabs. There's nothing to really. I think you guys are overthinking it too much. There's nothing to think here. Major FOMC, huge news. Anything happen? Gold could rip up. Gold could go down. Like even if gold was gonna have a push up, you would still come for some very big liquidity grabs, like this, before doing something like this. 3 trades this week, 2 which were yesterday, and I'm at plus 260. Nice, 260 is good for a week like this week. Yeah, exactly, same, Sean. You know, we can kind of sit here and think, overthink, or we can just accept it. Why do I feel I need to trade every day, and how do I stop? I don't know. You know, you kind of have to know your plan enough to know. It's not the fact that you may not get opportunities every single day. It's like trading every single day. Not only is it incredibly stressful, it's also completely unnecessary. You don't need to be in positions multiple times a day, every single day to be making money. You need good quality trades. And I'd be very surprised if you could take good quality trades every single day. And it's also very stressful, you know. Again, it's kind of like it almost becomes like an addiction. You know, are we trading to make money, or are we trading because we have an addiction to the charts? You don't want to be trading from an addiction perspective. It is very easy to get addicted to trading, but that's not what makes money. If you feel, you know, you kind of have to, if you're trading every single day and you're not yet making money, you know, go back and look at how could I have removed the losing days? You know, how could I maybe minimize some of these losses? And most of the time it's because there's no real daily bias. So you're trading before major news. Therefore, you know, you just want to learn to eliminate them days. To me, it's like I say to you guys, I trade on average 3 to 4 times a week. And I'll show you guys my account here. Let me just, I'm going to show you guys this. I showed it yesterday, but I'm just going to show it again quickly. Just so you guys can see what I'm talking about. Let me see if I can show you guys this account here. Where are we? So I'll show you guys this. This is my main account here, which I'm not trading today because I'm not going to trade before news. But this account here is up $12,700 with a 65% win rate and a 3.8 risk to reward. Now, to show you guys, I don't trade this account every single day. Last week I took 3 trades. I ended up the week over $1,000. Last month I traded this account. You know, you can see here, like this was a very quiet week. I think I traded some other accounts in between here, but you can see on average I'm trading like three days here, 3 days. You know, I'm not trading every single day, multiple times a day, because I have to understand that more trades doesn't equal more profits. More trades equals more stupid decisions, and over trading is what leads to most people blowing up. Most people think I need to be in positions all the time, but you know, you guys could get like a nice 100, 200 tick gold, 200 tick trade on gold, you know, 1 or 2 times a week, and you're making great returns. More trades doesn't mean more profit. You know, can you trade every single day and make money? Probably. It depends on your style and what's actually working. I think for newer traders, focusing on not trading every single day and focusing on the good quality setups is really going to help you. And down the line, you know, if you want to trade the lower time frame, more fine. But in terms of actually getting consistent, you really want to be focusing on the good quality setups. You could take a handful of trades a week and be making great returns. Now, I'm not saying you can't trade every single day and make money. I say for most people who are getting into day trading, it's unlikely that if you're taking multiple trades every single day, you're going to make money. Yeah, exactly. Yep. That's what I like to see. I like Aaron's streams, but I stick with my bias from pre-stream. Exactly. Don't 100% listen to anyone's opinions. Exactly, man. That's the absolute key. You shouldn't. That's why I always try and give you guys a neutral perspective. If we see different, that's the good thing about trading. Yeah, if you're watching the streams, you guys know what a quality setup is. If you guys have been watching the streams for long enough, you know what a good quality setup is. If you guys have been watching me, you've been following what I'm talking about, you guys know what it is. You'll be able to work it out. You continue watching, watch the breakdowns I post on my YouTube channel. You guys can work it out for sure. It's not, the hardest part of trading isn't identifying good trades. The hardest part of trading is identifying the bad trades. Is knowing that, cool, this isn't a good trade. Let me just not take this position. Because most people are good at identifying good trades. Most of you guys can see good trades, but most people just can't bear to not be in a position constantly. That was a huge shot. What was this? This is a huge shot, man. Yen futures, that was incredible. 4-hour trend line, that was absolutely beautiful. Nice, Senna, nice. Locked myself out for 10 hours. That's amazing, man. Amazing. I'm probably doing the same soon. Yeah, that's it. And for me in the earlier days, yeah, I could identify good winning trades. I could always, we always make money here. We all make money here, But it's during these times that we all end up giving it all back. And that was my biggest thing, that I'd look back at all of my trades and I was like, if I was just not only to get more winning trades, but able to eliminate more of these losing trades, man, I'd be way green on most of my months. I spent a lot of time reviewing my bad trades and my good trades to figure out, well, what made these trades good and what made these trades bad, to try and understand, okay, what do I need to focus on and what do I need to ignore? So again, if you guys aren't journaling and then you're wondering, you're doing the same thing day in and day out, week in and week out, not yet where you want to be in trading and you're not changing anything, then you kind of have to get to a point where it's like, well, I have to look at myself and be like, look, this isn't working. I need to switch something up. I would always be reflecting on my trades, my weeks, every single weekend. I'd be looking at my trades. What did I do this week? How could I have maybe capitalized on this week a little bit more? Always trying to refine and get better and better and better. That's the biggest thing about trading, is you have to be someone who likes constant progression. Because if you think trading is just going to be, I'm going to show up lazy, half-arse it, unfortunately it's not going to work. You have to have true dedication and discipline to be a good trader. You have to want to be a good trader. It's not something that's just someone's going to give to you, or it's just going to happen. Yep, exactly. Yeah, exactly. But being caught up in chop, exactly. Some of my worst losing trades on gold was when you get caught in price action like this. So when I see stuff like this before FOMC, could I sit here and maybe scalp a little short in the 5 minute? Maybe. But what's more important is these are the times where, we end up taking a lot of losses. Therefore, let me just not trade it at all. And that's very, very, very good discipline. Yeah, the hourly's ranging, yeah, exactly. Hourly and daily as well. So with that being said, YouTube guys, I've been on for like an hour and a half here. I appreciate you guys taking time to tune in. It is FOMC day today, so I'm not going to be trading here today, guys, but it was still good to jump on, catch up with you guys, share some markets. You guys have my liquidity levels for pretty much all markets here today. So we'll see what we get for the rest of the day. Remember, FOMC, 7 o'clock London time. Trade safe, guys. Don't force it. We have all day tomorrow, all day Friday, and all month to trade. So do the smart thing, lock yourself out, and then we'll see what we get tomorrow. Trade safe, guys. Don't force FOMC, and I'll see you guys tomorrow. Peace.